Last year, as the crypto market began its recovery, Solana gained the spotlight, and many investors became convinced that this Ethereum killer could be the front-runner of the current cycle. Fast forward a few months, and now a new challenger, SUI, has entered the fray, earning the nickname of the Solana killer. Investors are beginning to wonder if SUI might actually be the crypto to dominate the rest of the cycle. That's why today, we're putting Solana and SUI head-to-head, analyzing them across several key metrics to figure out which one might come out on top. In today's video, we'll compare Solana and SUI across 5 rounds: founders and funding, technology, tokenomics and price potential, adoption, and challenges. We'll share the results of each round, and ultimately, give you our thoughts on which blockchain could lead the way this cycle. If you're ready for this deep dive into Solana versus SUI, be sure to give this video a thumbs up and subscribe to the channel for more blockchain comparisons. Let's take a closer look at the first metric: founders and funding. Solana was founded by Anatoly Yakovenko, a former Qualcomm engineer, in 2017. Originally designed as a decentralized alternative to centralized stock exchanges like Nasdaq, Solana eventually expanded its vision to become a multi-purpose blockchain, supporting a range of use cases such as DeFi and payments. Development is led by Solana Labs, and the project's ongoing coordination is handled by the Solana Foundation, a Swiss-based nonprofit. Solana launched its mainnet in March 2020, though it remains in an ongoing development phase. Notably, the FireDancer validator client, currently being rolled out, will be a significant milestone once fully implemented. Regarding funding, Solana raised $25 million through various ICOs between 2018 and 2020, and an additional $314 million in 2021, attracting strong support from venture capitalists. However, the involvement of FTX, a significant early backer, became a source of FUD after FTX's collapse in late 2022. Fortunately, earlier this year, remaining SOL tokens held by the FTX bankruptcy estate were sold over the counter, mitigating some of the potential damage. On the other hand, SUI's journey began under the shadow of Meta, formerly Facebook, whose attempts to create the digital currency Libra eventually led to the project's dissolution. From this, 2 teams branched out, one creating Aptos and the other founding SUI. The blockchain is the product of Miston Labs, co-founded by several former Facebook employees. The core of SUI lies in the Move programming language, a technology originally developed for Libra. Since SUI's mainnet launch in May 2023, it's been building upon the innovations started at Meta, with development coordinated by the Cayman-based SUI Foundation. In terms of funding, SUI has raised $336 million through multiple rounds, including $96 million to buy back FTX's allocations. Next, let's dive into the technology behind each blockchain and see how they stack up against one another. Solana operates on a proof-of-stake mechanism combined with its unique innovation, proof of history, which helps the blockchain achieve impressive speeds of up to 200,000 transactions per second. Solana's efficiency is driven by its 400 millisecond block time, helping boost its throughput. Currently, Solana is supported by about 1,400 validators, which adds to its decentralization. Despite its speed and decentralization claims, criticisms regarding Solana's reliance on centralized services like Google's Bigtable remain, as it introduces potential points of failure and questions the true level of decentralization that the network claims to offer. SUI uses delegated proof of stake and boasts the ability to process up to 297,000 transactions per second under optimal conditions, with the Move programming language as its technological backbone. This language takes an object-oriented approach rather than using traditional accounts, a concept that could open the door to unique blockchain applications, albeit ones that remain largely theoretical. The recent Mysticetti consensus protocol upgrade has significantly reduced latency and improved efficiency, achieving transaction finality in around 390 milliseconds. Despite these improvements, the network's validator count of around 108 remains a concern for those prioritizing decentralization. Now, let's explore the tokenomics and price potential of both projects to understand how their economic structures could influence long-term growth and investor interest. Solana's native token, SOL, plays an essential role in the ecosystem, enabling staking, paying transaction fees, and governance. Initially, Solana burned 50% of transaction fees, but this practice was halted in May 2023. Solana launched with a planned total supply of 500 million SOL, but not all of it was in circulation immediately. Due to aggressive vesting schedules, 90% of the supply had already entered circulation by early 2021. Despite high initial inflation and a complex vesting schedule, early investors who bought in at the ICO price of 22 cents have seen impressive returns, reaching around 650 times their original investment. Analysts believe that if SOL continues to follow a path similar to Ethereum's, it could potentially reach a market cap that translates to a price of $1,100 during this cycle. SUI's token is also integral to its blockchain ecosystem, supporting staking, paying transaction fees, and governance. With a maximum supply of 10 billion SUI coins, half of these tokens are allocated to community reserves, including staking rewards. Early SUI investors saw significant returns, up to 20 times their ICO investment of 10 cents. Looking ahead, SUI is projected to potentially reach a market cap of $70 billion, which would place its price in the $20-24 range, depending on upcoming vesting events and broader market dynamics. Next, let's examine the adoption metrics for both Solana and SUI, focusing on their ecosystems, developer communities, and partnerships to understand how well each project is gaining traction in the market. Solana's ecosystem boasts over 4 million Phantom wallet downloads and 5 million monthly active wallets, along with a healthy $6 billion in total value locked across its DeFi platforms. These metrics, combined with an extensive developer community and support from major institutions like Visa, paint a strong picture of adoption. In comparison, SUI's ecosystem is still growing, with its primary wallets collectively surpassing 1 million downloads. While data regarding monthly active wallets indicates promising adoption, SUI's total value locked, $1 billion, and the number of developers, 1,100, lag behind Solana. However, SUI's partnerships, such as those in the gaming sector, indicate that its growth trajectory is accelerating. Finally, let's address the challenges faced by each blockchain, as overcoming these obstacles will be crucial for their continued growth and long-term success. Solana's challenges stem mainly from its technical reliability. The network has suffered from multiple outages in the past, with the last major one in February 2023. Solana's high hardware requirements for validators and ongoing competition from other blockchains like DPoS also pose significant risks. For SUI, the biggest challenge lies in the development of its Move programming language. Early vulnerabilities in the Move code are reminders of the complexities involved in building a new blockchain standard. SUI also faces competition from DPoS and other Solana-like chains, as well as the challenge of differentiating itself in an increasingly crowded market. When comparing Solana and SUI, it's clear that both have unique strengths and challenges. SUI takes the lead in innovation with cutting-edge technology and the potential of the Move language, while Solana shines in adoption, institutional partnerships, and proven resilience. Tokenomics favor Solana in the short term due to its more established investor base, but SUI's focus on pioneering new blockchain approaches could pay off in the long run. For many investors, holding both might be a strategic way to cover different potential outcomes. Whether Solana's reliability issues get resolved or SUI's new technology takes off, a balanced approach might prove to be the most rewarding. Let me know in the comments, are you Team Solana or Team SUI? And if you're looking for more insights, make sure to explore one of our other videos to dive deeper into the latest trends and projects. If you're interested in foundational technologies and the new contenders that could challenge the likes of Ethereum and Solana, this one's for you. Or, if real-world assets are your focus, dive into how the blockchain is transforming tangible assets and the opportunities ahead. If you enjoyed this video, please like and subscribe. It really helps the channel, and I really appreciate it. The information provided in this video is for educational and informational purposes only, and should not be considered financial or investment advice. Always conduct your own research and consult with a professional before making any financial decisions.